Good morning, everyone. It's Friday, the 27th of December. This is the last Friday for the year 2019. So we're saying thank God it's Friday to all our viewers here in Nigeria and around the world. I am Bosin Amafaye. Let's get the show started. Nigeria's businesses are resuming today after the Christmas and New Year holiday. And sorry, I'm Boxing Day, I beg your pardon. And that is why we have a full trading day today on the marketplace till 2:30 p.m. on the Nigerian Stock Exchange. We're expecting investors and everyone to react or to take on board some corporate news just as we're heading for the Christmas holiday. On Wednesday, the change of leadership, or what you call the Group Managing Director and CEO at Dangote Cement, as well as the earnings for the full year 2020 ended September at Nime Pharmaceutical. All those numbers and the news are what investors will digest today. And, of course, a few other on the general news box. All of these, we'll see how they are put together today. Then on Monday, we'll have a better review of this week, trading week, cut short in two by the Christmas and Boxing Day holiday. Meantime, the Chartered Institute of Bankers is pushing ahead that the government should move to create an education development bank which will focus on providing long-term single-digit interest rate credit for strategic stakeholders in the education sector. The institute believes that Nigeria is ripe for a dedicated education bank that will help government leverage its annual budgets on education, which is critical to human capital development. And that's one news coming through the holiday season. Meantime, the Securities and Exchange Commission released what it calls new initiatives and various strategies that will help the authorities to tackle the unclaimed dividend problems. It was the legacy problems, by the way. The head of the SEC, Mary Oduk, says the legacy of unclaimed dividends is due in part to the lack of proper identity management years ago in the Nigerian securities market. Now the SEC is ready to redress that. Ms. Uduk says the Central Securities Clearing System, PLC, and registrars are working on information from legacy shareholders to update their accounts so that they can claim their dividends. So the SEC is telling dealers or stockbrokers that there will be no transaction on any account in which information about the shareholders or investor has not been updated after the time frame has been given for them to resolve all the issues regarding to the update of information of stockbrokers on the of shareholders on the platform of the stockbrokers and in the CSCS. If you've done all of that, if you don't have your update, there will be no transactions on your shares. Meantime, the SEC released a new set of guidelines on Tuesday this week, which is part of what we're talking about today. That part of that will be electronic trading rule, which, of course, the SEC believe will resolve part of the unclaimed dividend issues. But the key focus for us this Friday is the new rules and amendments that the regulator released, which has to do with derivatives trading, exchange-traded funds, central counterparty system, registration of fixed income securities, sundry amendments into reporting, earnings forecasts, and all of that. Quite a very comprehensive list of what was released just before Christmas by the SEC, and that's what Umiano, who is the head office of the chief economist at the SEC, is joining us live for this morning from our Abuja studios to take us through this as we take on through the final trading day of the week and getting everyone on board to understand what these new rules and amendments are as we take time to lay back, enjoy the rest of the year, then move into the new year. Good morning. Let's get this conversation on the way right now. Hope you had a very nice holiday.
Yeah, thank you, Bosin. Yeah, I had a good holiday. And you?
Thank you so much. Now, let's, before we go to the new rules, let's talk a little bit about the year 2019, which is outgoing. Give us a sense of what the SEC did during the year, the new initiatives, the new strategies that are put in place to address some of the key issues at the marketplace.
2019 has been a good year for the SEC. A lot of people referred to the negative returns in the equities markets, but we think that that doesn't define the year. This has been a year that's been eventful. We have made a lot of efforts towards resolving the unclaimed dividend problems. We have also finally come out with the rules around derivatives. The derivatives market, we believe, will deepen our markets, will make more securities and more products available for trading in our markets. Will provide participants with risk management tools. We've also brought out a few more rules on the CCP, also supporting the derivatives market, and then the rules around the CIS, that's the mutual funds, so that will make them better and to be able to attract more investors. So it's been an eventful year. We are happy with what we have done this year, and we look forward to a better year for the market in 2020.
My question here relates not yet on the new rules or amendments. Far from January to date, if you look at the quarterly CMC meetings and all of that, and you're talking about the unclaimed dividend. So if you try to outline what the Commission has done, the regulator has done so far this year, you said it's been eventful. So we'll come to these latest rules and amendments. But if you look at the year to date, give us what you call the milestones.
Okay. We've gone very far into solving the unclaimed dividend problem. That's a big milestone for us. We have engaged NIBS to make use of the BVN, and we've got CSCS at the registrars working towards reducing it, and there's been a marked reduction. And more importantly, we know that there will be no future unclaimed dividends. There will be no additions to the unclaimed dividends, and we regard that as a success. We believe that when we solve the problem of the identity issues we have presently, the problem of unclaimed dividends will be a thing of the past. So for us, that's a big achievement. And also we have continued with our education of the market. After the third CMC, when I last was here, I explained that we are making more effort towards market education, awareness of all the things that are in place, the issues around e-dividend. People don't have to go to their stockbrokers or get checks to get their dividends. Dividends are now paid directly. A lot of innovations have been put into the market to make the market more attractive, to make the market better, and to protect the investors more. So that's what we have achieved this year.
Talk to us about the Nigerian capital market roadmap. Where are we on that particular issue and document?
Okay. As you may well know, it's a 10-year program. So what we do is each year we select a few things on the roadmap to work on. So this year, one of the things we took was the e-dividend thing, and resolving the unclaimed dividend problems, and then market education. So, and on all counts, we have done a lot. We've made a lot of strides on all the counts. So next year, we are picking up a few other things like the derivatives, trading, strengthening the CIS market, CIS part of the segment of the market. And that's why you see that we release these rules on Monday.
So when we talk about the roadmap, which is ongoing and has a few more years before it elapses, in terms of what the various committees are doing, we talk about unclaimed dividend, but there are a few other issues that are out there where you talk about e-filing. You talk about issues around getting to resolve dividend warrants and all of that. Do you think, in terms of registration, shareholders coming on board and say, look, I'm opening up my multiple account registration over the years and all of that, do you think the SEC has made any impact so far in the outgoing year?
Yeah, yes. The issues around the multiple subscriptions. The SEC, gave some time for people who have such accounts to, regularize them. I believe that the stockbrokers and registrars are working on that now. We believe that very soon we'll identify the owners of these accounts and put them together so that those shares will become tradable again. On e-filings, we are making, we are in the process of deploying a software that will help us with e-filing. That will make filings more efficient, make it easier for capital market operators to send in returns to us. On the issue of dividends, like you may well know, there are no dividend warrants, and we do not encourage dividend warrants. We have put in place a system for e-dividends. So what that means is that when dividends are paid, investors no longer expect or do not wait to get warrants by post. These dividends are paid directly into their bank accounts. That's why we are saying that going forward, accounts without full details that have not been updated will no longer trade, because we don't want the issues, the legacy issues we have to keep growing. We don't want unclaimed dividends to keep growing. We want it to be such that when dividends are paid, investors get their dividends directly into their bank accounts. And they want to do away with the inefficient process of sending out warrants through the postal system.
So, in terms of what you called market oversight, there are a number of issues in 2019 of what you call Ponzi schemes or illegal folks who are illegally advertising unregistered products and services, and a few of them have been made headlines in the new year. How much did the SEC do this year along that corridor, using your handshake with the EFCC, for example, the ICPC, and the police to make sure that ordinary folks, unsuspecting investors, in particular retail investors, are not fleeced of their hard-earned money?
Thank you, Bosin. The problem of Ponzi schemes has it continued this year. Unfortunately, Nigerians still invest in these scams. This year, we identified and closed a lot of them. We thank members of the public who keep giving us information about these unscrupulous schemes and scams. We thank the police, the EFCC, and all the authorities who have always come and cooperated with us in closing these Ponzi schemes. But they still remain attractive for reasons many of us do not know. That's why we are intensifying efforts at educating the public. You cannot get promises of 100% returns in 1 week. It's just not possible. So these Ponzi schemes are just there to take away your money. So we still call on the public. When people advertise these schemes to you, or when you come across these schemes, report them to the SEC, and the SEC will take action to close them down. And those who are, promoting these schemes, it's time to stop. It's time to stop. Stop fleecing people of their hard-earned money and investments. The SEC will continue to work to protect investors, to make sure that these schemes do not see the light of day, and even when they do, they are closed down as soon as possible.
The issue of Ponzi schemes is not entirely new to the Nigerian market, and it's not entirely new to the Securities and Exchange Commission. So, why do you think the Ponzi schemes keep rearing this ugly head, even when the market was booming and when the market is on the downside? Having gone through this over the years, has the SEC been able to try to find out why does it remain attractive?
Okay. Ponzi schemes sort of thrive all over the world, so it's not a Nigerian problem. Ponzi schemes tap into human greed. If someone tells me I can earn double the money I have today, I know it's probably a lie or it's got to be something illegal. But certain people don't mind that as long as they believe that they will get these returns. So Ponzi schemes are a problem everywhere. But in the Nigerian case, we think that one of the reasons we have these schemes is the level of, I would say, poverty, in a country. People think that these are ways they can easily get out of poverty. It might also be as a result of not being aware of what investment options are out there in the market. That's why the SEC and the entire capital market community has this year intensified efforts at investor education. People must know that it's easy to open a money market account, open a mutual fund account, get stocks and things like that. So we want the market to be easier, more accessible. We also want to have more products. We want a deeper market. We believe that with this combination, it will reduce the number of Ponzi schemes coming up and number of investors putting their money into Ponzi schemes.
So if you look at the increasing spate of technology, digital economy, financial inclusion, has it really impacted on how much enforcement and oversight that the SEC has to do against 10 years, 15, 20 years ago? Cybercrime,
yes,
what have you?
Yes, Bosin. It has. The SEC is is continuing to deploy technology in regulation. So our regulation is becoming better, it's becoming more efficient. We're able to tap into data we couldn't tap into before. So these things now make regulation easier, make regulation more efficient, make regulation more far-reaching, and make us better able to protect investors. So technology has been good. And also we have continued to encourage the members of the capital market community to embrace technology, to make it easier for themselves and for investors to invest in the market. These days, you see that we have a lot of improvement. Some years ago, if you wanted to buy any stocks, you needed to pick your phone, call your stockbroker to make the choices or to give instructions. But now most stockbroking firms have platforms you can just log in and buy and sell on your own. So there's been a lot of improvement, and as it's improving access of investors to the markets, it's also improving the ability of the regulator to regulate the market and better protect investors.
Are you seeing increased attempts at technology disruption in terms of the bad guys who want to steal people's shares, who wants to hack into people's accounts and what have you? What's your enforcement unit saying so far this year? What's the report coming in from there?
Okay. In terms of enforcement, we have specified minimum operating standards for the capital market operators, for the exchanges and everyone. And these standards include risk management tools embedded in them. They include security tools. So we haven't been seeing a lot of this. In fact, it's on the fall. It's falling, actually. But our enforcement department is up. They are ready. They are always watching. And they are not telling us that these cases are rising. They're actually telling us that these cases are less, but they are ready and they keep catching these cases when they happen. But we believe that as we keep improving the risk management aspects of our operating standards, both from the regulator side and from the market side, these things will be on the reduction, the reducing side, not rising.
Okay.
So no problem,
Okay.
no problem now. We're all excited about the market, actually. Things are improving, things are getting better.
Yes, I'm excited with this new set of rules and amendments, and that's what I want us to talk about when we come back after the break. So stick around. We'll drill down. It's very diverse in terms of the content, so I want you to please drill down a little bit more into these new rules and amendments when we return in 2 minutes, everyone. Okay, Umiano is the head office of the chief economist at the Securities and Exchange Commission, Nigeria, and is live to us from our Abuja studios for this conversation. Drill down on SEC new rules and amendments. Thank you so much, okay, for being there. So let's go down with these new rules, which was released a few days ago. And I'm picking the first on the list, which is derivatives trading. Simply put, what is derivatives trading?
Okay, thank you, Bosin. Derivatives are securities that derive their value from another security, an underlying security or event. These have been lacking in our markets over the years. Derivatives are traded in all the big markets around the world. And their number one use is as risk management tools. They are used to hedge other securities. They trade in other securities. So we believe that this is a good time to have derivatives in our market. Derivatives are presently being traded in our market, but they are traded over the counter, what we call OTC. But now we want to introduce exchange-traded derivatives so that people can now hedge their positions or take positions in a market. So the number one advantage we think, apart from the risk management, is also that it helps deepen the market. It gives traders and investors more instruments, more investments, more instruments to invest in.
When we talk about derivatives trading, as you said, for risk hedging, but again, the risks in derivatives trading are a bit higher than the underlying assets. So what are some of the rules being provided around these papers, this very sensitive trading in derivatives, or what you called the papers over those assets? Why are we moving from OTC to exchange traded? What will be the difference in real terms that the local investors need to understand?
For OTC transactions, they are just between one party and the other. So the two counterparties meet and agree and design contracts as it suits the two of them. So most of the time, these are contracts done between knowledgeable parties, and they're able to protect themselves. But for the exchange-traded derivatives, you asked about the risk management framework around them. We have put in place a very robust risk management framework, and that's why we brought these rules out. These rules cover, in addition to registration requirements of the derivatives contracts themselves and also the participants in the derivatives market, they also specify the risk management framework that the SEC expects that every participant in the derivatives market would have. And when I say every participant, I mean the exchanges, the central counterparties, and even the dealing members themselves. We also have we also expect that the exchanges make rules around what kind of investor can invest in derivatives and what kind of investor cannot. So we are watching from every part of it, and we have also learned from many countries where these, derivatives have been traded in some countries for 40, 50 years. So we are not reinventing the wheel here. And we have also learned from mistakes that have been made. So I can assure you that we are taking all necessary steps to ensure that this market is safe. We believe that this is the time to have derivatives in our market, and we also believe that we can introduce them in a way that they are safe and beneficial to the entire market.
What about collective investment schemes and special funds? Are there what new rules or amendments are coming in place here for this that space in our market?
Okay. Let me say here that the collective investment schemes are, there is a part of the market that we intend to grow. We believe that many investors have made mistakes in the market because they have been playing in the market without having the requisite knowledge. So we are encouraging investors, especially the retail investors, to approach the market through these funds. I mean, it's better to, if I don't have the time to analyze equities, it's better I give my money to an equities fund who have professionals who can analyze and choose what equity is good and which one is bad for me. So that's what we want to do. But the rules around CISs are rules to strengthen that aspect of the market. I can give you one of them. One of the rules says that before we had a rule that said that collective investment schemes could not invest in papers or securities issued by related parties. Related parties mean parent companies, associates, and companies like that. But now we have amended those rules. The rules now read that they can invest in money market instruments of such related parties subject to certain guidelines. And one of those guidelines is specifying the amount of money out of the quantum that the CIS fund has that can be invested in this. It also specifies that the trustee has to, permit the CIS fund to invest in that. So generally, there are a few 2 or 3 rules put together for the CIS funds, all aimed at strengthening the CIS funds. We believe that that segment of the market is still untapped, is still very low. I mean, we still have less than ₦1 trillion invested in mutual funds in the country. Having studied other countries, we have seen that that is a bit of an anomaly. That's why we are amending these rules and making that segment stronger. And we are encouraging Nigerians to go into these funds, buy these funds. Let's remember that we have funds targeted at real estate, at fixed income, at the shorter end of the market, that's the money market funds, and all kinds of investment. Even the ethical funds are there. So the funds in our market presently cover a wide spectrum, and investors can access the market through those funds.
Just for about a minute with the CIS, which is collective investment schemes. In other words, if a bank, for example, has a managed funds or collective investment scheme on the market street, the new rule allows a certain amount of money from the managed funds that can be invested in if such a bank floats a commercial paper. Is that it?
Yeah. If a bank that owns, not a bank that manages a CIS fund. Some of these banks have capital market operators. I mean, they have subsidiaries that are capital market operators. So if the bank owns, for instance, a capital market operator that manages a CIS fund, and the bank issues a commercial paper, that CIS fund can invest in that commercial paper subject to these rules that have been placed, these guidelines. First, the trustee has to agree, and then the thresholds I just talked about. So it makes it clearer, and it makes these capital market operators more able to invest.
What's going to be new in terms of in the area of capital market holding companies?
Okay, so for capital market holding companies, we've had a rule that is we've been talking about for some time. I think that we should wait a little for those rules to come out. They're in the rulemaking process, and they will clearly state how capital market holding companies will operate. Because we think that that's an area that has led to some regulatory arbitrage. Some companies are structured in such a way that nobody's really looking at them. The central bank, most of the time, handles the banking side, and then the SEC, the other side. But some of them are structured in a way that they fall through the gaps. So we are trying to put something together that covers all of them. I think the market can wait a bit. These rules will be exposed very soon.
Are you satisfied with the current code of corporate governance at the securities market? The SEC satisfied? Or you are amending some of the provisions of the code?
Yeah. No, we are satisfied with the code. You know, the code, the SEC had its own code of corporate governance at a point, but then the FRC came out with the national code. But also, there's that clear provision that where the national code and the code for the sector differ, the entity is supposed to follow the stricter one. So for the capital market, we have a code. The SEC has a code, which all we think that we say that all capital market operators should follow. So we are satisfied with the code as is now, but that doesn't mean that going forward, if there's need for amendments, we will not amend. But for now, we are satisfied with the code.
Shares offering is the aim thing all over the world, and some folks thought that the MTN Nigeria's IPO will go through electronic offering, but that didn't happen as initially thought. So, what's the learning curve here for the SEC in terms of rules around electronic share offering, and where are we in terms of putting processes in place, whether it's going to be an IPO or rights issue or whatever, offer for sale, and all that?
Okay, so for electronic offering, this is something we support. Our rules have been exposed. They are out on electronic offerings. We believe that electronic offerings will help solve the problems of unclaimed dividends. So it's something we are backing seriously. Because through electronic offerings, we will not have the problems of identity as we presently, or as we had in legacy offerings. So unfortunately, MTN didn't go through electronic means, but we are pushing this. We believe that in the near future, all offerings will be electronic. Because it has a lot of advantages. It helps. It means that people who are not close by can invest. It also means that we're able to get the data we need for regulation. It also means that the offering is more efficient and cost saving. So it's something we are working on. The rules have been exposed. The rules are in the rulemaking process and will soon be out for everyone to use.
Via electronic share offering. Are you saying if I'm sitting in Ghana or in Nairobi or in South Africa or in Zimbabwe, via an electronic share offering process in Nigeria, I can buy into the market?
That's the idea. That's the idea. But when the exchanges finish putting things together, ours is to make the rules and to regulate. But that's the idea. We want to open up our markets so that more people can invest from different parts of the world. We want, like I've been saying, we want a deeper market. We want a more attractive market. We want a bigger market. We think that our economy is big enough to have a much bigger market. I mean, the capital market makes up less than 10% of the GDP of the country. And if you look at other countries, even in South Africa, it's over 100% of GDP. So we believe that we have a large room for expansion, and that's what we are pursuing.
Perhaps we can target some of the diaspora monies if they can do electronic participation in our market. Yeah. But when folks invest, yes, the SEC has guidelines around reporting by listed companies, which are mandatory. So where are we in terms of reporting rules? Sorry about that.
Excuse me.
So where are we around reporting rules, the guidelines for timely reporting, and who can make earnings forecasts in our markets? Okay.
For the listed companies, we found out that the information available to investors on the websites of these companies vary. So certain companies will give information about their governance structure and the financials, while others will just talk about the financials and nothing about the governance structure. And we felt that this is not good enough, because the more information investors have, the better informed they are and the better their decision making. So we came out with these rules specifying minimum requirements for information that has to be on the website of these listed companies. So these are the minimum. So it means the companies can actually supply more information. Of course, with more information, company stocks are better traded because people are more informed about the companies. So, for instance, now we specify that the governance structure must be there, brief profiles of board members must be there, things around the risk management framework of the company must be there, and things like that. So that when investors look at these websites, they're able to see, get the minimum amount of information necessary. So that's what the rules point to.
And if I'm a listed company and I wish to make earnings forecasts or give profit warnings?
Yeah. Of course, profit warnings have to be sent out to everybody at the same time. And what better place to send out this than the website? We say that these warnings can be done through national dailies or through the TV and all that. But the website is also very important. That way, we know that everybody gets that information at the same time. That's our concern as the regulator. We want to be sure that the market is fair. Whatever important information is being released has to be released to everyone at the same time. And releasing it through the website is one of the ways to ensure this.
One of the things that the Nigerian government has been working on in recent times is on agriculture. Everyone sees what the central bank is doing in areas of interventions in agriculture, in rice, in cassava, and a number of areas. And on the back of this is what everybody is saying, look, we need to move beyond just farming into agro-allied industry and things like that. On the back of that, some folks are coming together and they think that, yes, they can do what is called commodity exchanges, which, of course, exist in certain jurisdictions around the world, which some folks believe is actually it will be a game changer if we can get some commodities exchanges up and running within the Nigerian space. So my question is, what rules and guidelines are here for the setting up of commodities exchanges? How many do we have licensed at the moment? And do we have more who are queuing up for licensing in the new year?
Thank you, Bosin, for that question. I believe that we are ripe for a vibrant commodities market. I mean, we produce a lot of these agricultural products. We even have oil. It's a commodity. So we have lots of things that we can trade in a commodities market, but we have not been very strong in that area. We have a few commodities exchanges that have been registered. We have 3 of them right now that have been registered. One of them is quite new. The other has been a bit vibrant in the spot commodities market, but we want a strong commodities market. It's a derivatives market that trades commodities, because we believe that that's the way we can strengthen our agricultural sector. While I agree that intervention is necessary, I mean, what the central bank and the government has been doing, intervening in rice, in so many things, I believe that the market is more efficient and better, because the market allocates resources better. If we have strong commodities exchanges, those exchanges will ensure that farmers get good price discovery, which is one of the problems I think our farmers have. What do I mean by price discovery? A farmer plants cassava, for instance, and he expects to harvest in a year's time. A good commodities market will give him an indication of what prices of cassava will be in a year's time, because futures contracts will be traded on that cassava. So that helps the farmer in his decision-making, in his cropping decision-making. So I think that if we have this, it will help us a lot. And the SEC thinks the same way. And the SEC has set up a commodities trading ecosystem committee. It's a capital market committee, and this committee has come up with so many recommendations, and these recommendations are being implemented as we speak. Our commodities rules, commodities trading rules are being worked on right now. So we believe that 2020 will be the year when our commodities markets will take off full-time. Right now, we have commodities trading, but they are mostly spots. But we want a derivatives market based on commodities, a market that can trade all the commodities we have, the solid minerals, the agricultural products, and others.
Oh, great one. Thank you so much, Umiano, for this extensive and comprehensive look into 2019 and some outlook into the new year. Thank you so much, the head office of the chief economist at the Securities and Exchange Commission in Abuja. Thank you so much. We appreciate your time. When we come back after the break, we'll try to give you a sense of where we finished off on Tuesday. But again, what's coming through in the final trading session.